What role does estimates play in accounting, and how does it affect the corporate financials?
It plays a huge role, as I mentioned before. Non-accountants don't know this, but basically almost every item in the financial report is based on estimates. Just an example, you look at the balance sheet of companies and you see what's called accounts receivable. This is the amount of money that your customers owe you, those that you sold them on credit. On the balance sheet, you have to present accounts receivable net of an estimate of how many of those customers will not pay during next year, in this case. So you have a fact, which is how much money your customers owe you, minus a huge estimate, sometimes 6%, sometimes 7%, of how much the company expects not to collect next year, but this is very soft, can change to 4% or can change to 7% in this case. So the problem with estimates is twofold. One is that in the current very turbulent economy, it's very difficult to estimate things that will happen in the future. Second is that it's open to manipulation. You can never pin down managers for misestimates. Even if by the end of next year turns out that double the amount of accounts receivable than you estimated was not paid, managers will just say that at the time, it's like Monday morning quarterbacking. At the time I made the estimate, it was based on the best information I had. Go and prove that they intentionally misestimated it. So it's an invitation to manipulation, to management. Some estimates are quite reliable, like car companies give warranties and they have to estimate the cost of future fixing of the cars. Since they have a huge volume of past car sales and warranty payments, they can reliably estimate. Some, particularly of the more recent regulations, mandate estimates that are very difficult to make, and they reduce the reliability of earnings.